But by looking at this and watching this over the last couple of years, and I've told people, Betty, privately and publicly, get out of your retirement funds, your annuities, dump everything that you can, and get into precious metals. It's going to be your only security for the future.
I understand, but who would buy the annuities?
Well,
that's what I'm asking.
The company that issued it.
Yeah, they have to buy them back. They sold them to you.
No, they have to cash you out, and I would do that as quickly as possible.
Yeah.
They have to
gold and
cash you
silver
out
is the only place that you're going to be safe.
I understand. The cashing it out, how much of a loss are you talking about?
You don't know until you call them. I mean, I'm getting emails every day. You know, I have $360,000 on there, and now it's worth $180,000. You know, what do I do?
Betty, hang on a second.
Get out.
Hold on, guys. Betty, hang on. We'll be right back. Top of the hour break. All right, we are back. Second hour of the National Intel Report on the third day of March, 09. Let's get back to Betty here. Betty, we had some problems here with Bob, and I don't know if you could hear him, but your advice to Betty, Bob, was call your annuity guy, ask him what this thing is worth, and get out of it. Am I paraphrasing correctly?
You are.
Okay.
All right.
You are, and you'll find that most of them are off considerably, just like the market is. And, you know, really what it is a guaranteed mutual fund. And, you know, the question comes into focus, well, if these annuities are losing that much money now and the Dow, say, goes to 4,000, which I think is doable, then maybe they'll be offside in those accounts for perhaps something on the order of 70 or 80%. And if that's the case, how are they going to guarantee the money that they've guaranteed? Now, in some states, in insurance policies and in annuities, the state law allows the insurance company to go to the legislature, like in Massachusetts, and say, we can't pay that 4 or 5% that we guaranteed, and in order to stay in business, we got to pay 1% guarantee.
Mm-hmm.
And the legislature will just pass it, just like all these TARPs and stimulus and all this other crazy stuff. And so essentially there really is no guarantee. And how many states can do that, I don't know. But a lot of insurance companies are going to go out of business. Now, the Hartford Financial Group, their stock just plunged because they asked the United States government for billions of dollars, and they got $1 billion from the state of Connecticut. And they're in serious trouble. Lincoln is as well. 2 weeks ago, one minor company went out of business in Virginia, and you're going to see a lot more of this. So there's a great deal of risk in especially stock insurance companies, because if the market continues down, they could go under. You may end up with nothing.
I want to illustrate.
And the mutual insurance companies are better, and the reason why is they only invest in bonds. But as far as any annuities that they might issue, if they do in fact do that, I don't know what the criteria in those annuities are.
Just to give you an idea, Betty, and talking specifically about retirement funds, they like to play little games. These people set unrealistically high rates of return, and this is to reduce government's annual contributions. And they paper over these investments to make losing years look like winners. Hang on here a second, Betty, and I'll give you a little glimpse into, well, how they've been fudging numbers and keeping people quiet in different accounts. We'll do that after this. Greg, hang on. We'll take your call next. 800-313-9443. Robbie, did you get through to anybody?
Yeah.
Okay, we'll be back.
Get ready for Real Talk Radio. You're listening to the National Intel Report with your host, John Stadtmiller.
I was talking about how these fund accountants, how they use some scurrilous techniques to make themselves look like winners when they're trying to cover some grease spots, let's just say. And just to give you an example here. Now, there's accounting gimmicks and pensions, and they create economic fictions, and they disguise the severity of the real problems. I'll give you an example. Teachers' Retirement System of Texas. Now, this is the 7th largest public pension in the United States. And it reports each year that its expected rate of return is about 8%. Public records show the fund had an average return of 2.6% during the past 10 years. Taking a look at California Public Employees Retirement System. Now, this is the nation's largest pension fund. Now, it's been reporting an expected rate of return of 7 3/4 over the past 8 years, and 8% before that, according to CalPERS spokesperson. Here's its actual rate of return during the decade from December 31st, 1998 to December 31st, 2008, has been 3.32%. And last year, when the markets tanked, it lost 27% of its value. And inflation, Bob, has been running, it's been cooking right along. At one point, we said that inflation was running between 12 and 14, maybe a little bit more, depending on what we're talking about.
Be conservative and just say about 10%.
About 10%. Well, we even it out. So, folks, what we're telling you here is your expected rate of returns ain't even keeping up with inflation. And here's the real bad news. The inflation factor has really not kicked in quite yet. Oh, you'll notice that $10 bill just told it out, and you'll magically see zeros added behind it. Then you'll know you've arrived.
Incidentally, on those two funds, they have approximately between 5 and 10% of illiquid assets, and that includes the toxic waste and commercial real estate, and they were big in that. And mind you, in 1985, they didn't buy this kind of stuff. They only bought bonds. I think that CalPERS and the Teachers Union, which is called, the other fund, they could get into some real serious trouble. And I think it's headed that way. And as an aside, the man who up until about 3 years ago ran CalPERS, which is in an illuminous front group, if you may, he went to work as a director of the World Gold Council. So that shows you where the World Gold Council is coming from. They're a bogus operation supposedly promoting gold, and all they do is promote jewelry, which is not really a factor in the gold market. And I say that because what they buy in India and other parts of the world is not jewelry. It may look like it, but it's just pure gold bangles, and women wear them around occasionally. But that's the way in some countries they prefer to buy their gold. And so jewelry sales now are down, and rightly so. The price is, higher. And jewelry sales are probably down, I'll guess, at 35%. And so I had to fit that in there because you can see what the mindset is in those two organizations, particularly in CalPERS.
Betty? Is she still there?
Yes.
Yeah, okay. Here's the message to you in Tennessee, and I don't even need a microphone to do this. Get out of your annuity!
I hear you.
All right. Thanks.
And then one more question.
Yeah.
Where is Social Security going?
Well, they'll probably pay off 20 to 30 cents on the dollar eventually. And the same thing which will happen to pension and profit sharing. But that'll probably be accompanied eventually by a devaluation and default simultaneously of all nations. And what they'd like to do, the people behind the scenes at that time, they would like to have a world currency, but they're not going to get it. But just to give you a rule of thumb, this is a guess, but if the government said, look, we're going to default and devalue. And so you have 30 days to turn in all of your old dollars, and for each 10 old dollars, you'll get one new one. And it'll probably be called a dollar at that time if they don't get their world currency.
And it'll be backed by the...
And that means that mortgages that were $100,000, the payoff will be $10,000. That means if you were making $100,000 a year, you'd be making $10 a year. If you were paying $2.50 for a loaf of bread, you pay 25 cents. That's the way it'll work.
I see.
All right, Betty?
All right, thank you.
Well, you're welcome, and thank you for your call. Robbie, you have a Bob Chapman deal of the day?
Well, not exactly. The only thing that currently are available are Canadian Maple Leafs. These are 1 ounce pure gold, 24 karat